Hello viewers, welcome to my channel. I'm Hasham Ali Khan. In this video, I'm going to give you the complete explanation of the subject Managerial Accounting Introduction. The first chapter of the subject Managerial Accounting Introduction. In this video, I'm going to explain you the meaning of the term accounting, branches of accounting, limitations of financial accounting, definition and meaning of management accounting, and features of management accounting, functions, objectives, then scope of management accounting, and advantages and limitations of management accounting, and lastly differences between management accounting and financial accounting, management accounting and cost accounting. These are the topics I am going to explain you in detail in this video. Normally in examination in the subject of managerial accounting, one theory question will be asked regarding the meaning, definition, functions, features, scope, objectives, and advantages, limitations, differences. This type of theory question will be asked normally in every examination. One theory question will be there from the first chapter, Introduction. So watch this video till the end. If you understand the concepts, then definitely you can write in your own words in examination and you can attempt the question with confidence. So I'm beginning with the meaning of the term accounting. Accounting is the science. Accounting is the science of recording, classifying the transactions and events, primarily of financial character, and the art of classifying, summarizing, analyzing, and interpreting those events and transactions, and communicating the results to the concerned persons who take the decisions and form judgments. This is a standard definition of accounting. If you analyze this definition, you can see the ingredients of this definition. First one, it is a science which is concerned with recording and classifying of transactions and events of primarily financial in character, and the art of making classification, making summarizing, analyzing, interpreting, and lastly communicating this information to the concerned persons so that the concerned persons can take the decisions or form judgments. So this is the meaning of the term accounting. The oldest form of accounting was financial accounting. It is the recording, classifying, analyzing, summarizing in order to prepare the financial statements. The financial statements are profit and loss account and balance sheet, the income statement and position statement. So any accounting which is concerned with preparation of financial statements is called financial accounting. Oldest form of accounting is financial accounting. But the financial accounting will suffer from a number of limitations. That's why new branches of accounting have been developed. So now I'm going to explain you about the limitations of financial accounting. This question will be frequently asked in examination. Explain the limitations of financial accounting. What are the drawbacks of financial accounting? That is the reason why different other branches of accounting have developed. The other branches of accounting are cost accounting, management accounting, etc. The financial accounting is concerned with preparation of financial statements. Cost accounting is concerned with classifying, analyzing the cost information, preparing cost statements and supplying to the information to the management. And management accounting is that branch of accounting which is concerned with supplying the necessary information to the management so that management can properly perform its functions efficiently. That is management accounting. Now, limitations of financial accounting. First limitation, historical information. Normally, financial accounting will prepare the financial statements. The financial statements will be prepared at the end of the year for the past information. So what had happened in the financial year, the result of the financial year, the financial position at the end of the year will be ascertained at the end of the year by taking into account only past information. That means, simple words I can say, financial accounting deals with the past information, historical information. That's why it is called post-mortem accounting. It will be done after the recording have been taken place. So there is the limitation. Management does not require information only about the past, management also requires information about future for controlling purpose. So secondly, no classification of information. The financial accounting will give the overall view of the business, the overall profitability of the business. It will not give the information about each of the department. Nowadays, a business organization, a huge business organization will have different departments, different processes, different activities. So this profit and loss account will not give the profit of every department. It will give the overall performance view. That means we will not get the detailed information. We'll get the aggregate view of the business. Next one, no standards. No standards, no norms are fixed so that we can be able to compare, evaluate our efficiency. Performance appraisal can be done. The performance appraisal can be done only when we have the standard and actual. If we have standard and actual, we can compare it and see whether the performance is improving or not. But unfortunately, in financial accounting, no standards, no norms. First, conduct the transaction. After conducting the transaction, it will be recorded. Finished. That is the limitation. No idea of efficiency. Financial accounting will not give any idea of efficiency of every resource. So many resources are used. Example, the machinery, the material, the men. So many resources are used. By financial accounting will not evaluate whether it is efficiently utilized or not, whether the plant is effectively utilized, whether the labor is effectively utilized, material is effectively utilized or not, cannot be known. So there is no idea of efficiency by keeping financial accounting. Next one is no aid to decision making. The management has to take a number of decisions regarding the utilization of plant, regarding the price fixation, regarding the product mix. Different type of decisions have to be taken by the management. The management cannot wait till the end of the year to get the information. Management will take the decision every day, every now and then. So there should be an accounting which should supply necessary information to the management for decision making purpose day to day. But financial accounting cannot supply the information day to day. That is the drawback. Next one is no classification of expenses. See here, to control the cost, we should classify the cost into fixed cost, variable cost, semi-variable cost. If there is classification of cost, then only we can be able to control the cost, reduce the cost. But financial accounting will not classify the cost. It will treat all the costs are of same nature. The treatment of every cost will be same. That is the drawback. We cannot be able to control the cost until and unless it is classified. Does not aid price fixation. Does not aid means does not help. This financial accounting will not help the management in fixing the selling price. Actually, selling price of the product or services will be fixed only after ascertaining the cost. After knowing the cost of production, we can be able to fix the selling price. But financial accounting says we will not calculate the cost until and unless you sell the goods and will tell the profit. So price fixation ke liye this financial accounting is not at all helpful. Next comes inadequate data for detailed reports. See here, management wants detailed reports of different activities taken place in the organization. But financial accounting cannot give the detailed reports. It will give the aggregate reports. So by having aggregate reports, total reports, the management cannot be able to take the decisions. It will not give detailed information. Next one, no emphasis on cost control and cost reduction. Nowadays, in the whole world, there is a lot of competition, stiff competition. We cannot fix the selling price at our will because so many competitors are there. If we fix a higher price, what will happen? The demand will come down. Our sales will come down. We cannot be able to increase the profit. So we don't have full control, unlimited control we don't have on the price fixation. So the alternative of increasing the profitability is the reduction of cost. The cost should be controlled. The cost should be reduced. And with financial accounting, we cannot be able to reduce the cost because we cannot have the efficiency performance appraisal. So in this way, the cost reduction, cost control cannot be done with the help of financial accounting. Last one is qualitative information is ignored. Financial accounting is concerned only with monetary transactions. Non-monetary items, variables will not be considered, like quantity, like units. The units or quantity will not be recorded in financial accounting, but management requires qualitative information. Not concerned only with quantitative, qualitative information also required. So these are the limitations due to which the financial accounting will not serve the purpose of the management. It will be helpful for external users. We should not say that financial accounting will not help the business. It will definitely help. But this financial accounting is mainly helpful to outsiders, external parties, like bankers, creditors, investors, government, etc. Now, next thing, definition of management accounting. On account of limitations of financial accounting, a new branch of accounting has been emerged, has been started. The new branch of accounting is managerial accounting or management accounting. It is that branch of accounting which is concerned with supplying the necessary information to the management so that management can be able to take all its decisions effectively, efficiently. Management has to perform. The first function of the management is planning, or in other words, we can say decision making. The main function of the management is decision making. For decision making, we require information. And there is no specialized department which should supply the information to the management in order to take the decision. That's why a new branch called managerial accounting has been started. Managerial accounting or management accounting means one and the same. Earlier it was called management accounting, now it is called managerial accounting. So it is that branch of accounting which is concerned with supplying the necessary information to the management as and when it is required. That's all. That is, so different definitions are given. Hongren has given one definition. That means it is the process. Management accounting is concerned with the process of identification, measurement, accumulation, analysis, interpretation, communication of this information to the different executive levels so that they can be able to attain the objectives. In order to attain the objectives, the executive levels require information. So this management accounting is concerned with identification, collection, measurement, accumulation, analysis, interpretation, and communication of this information to different executive levels in order to take the decisions. This is management accounting. So next one, features of management accounting. Another important question which may be asked in examination, features. The first feature is future oriented. The financial accounting first drawback is it is past oriented. Whatever had happened in the past, that will be recorded, but in management accounting it is future oriented. The recording which is concerned with future, no doubt it will use the past data. Management accountant will use the past data in order to make the projections, forecasting, estimation about the future. So main focus of management accounting is the future oriented. Secondly, greater emphasis on various elements of cost. Just now I told you, in financial accounting it is concerned with aggregate cost. It will not classify the cost. But management accounting requires the complete classification of cost into different categories like variable cost, fixed cost, semi-variable cost. By classifying, the management can be able to control the cost, reduce the cost. Next one is both science and art. This management accounting is a science because it is concerned with some principles, some rules, etc. So how the management accountant will function, he must know the rules, principle, procedure. That's why it is called a science. Apart from that, it is an art. Management accounting is an art because it is related with future forecasting, and forecasting requires subjective judgment. The management accountant has to apply his judgment. So no two management accountants will be similar. Every management accountant will be different. According to his own judgment, he will take the decisions. So that's why it is also called an art. Next one is, it is an aid to decision making. See, The financial accounting is concerned with preparation of financial statements. Preparation of financial statements. Whereas management accounting is concerned with decision making. That means the main feature of management accounting is it has to modify, it has to generate the data which is required by the management for taking decision. So management accounting aids or helps in decision making. Next one, it takes into account non-monetary variables also. One of the feature of management accounting is it is concerned with monetary variables as well as non-monetary variables. The management accountant also takes into account the units, the quantity also in making the reports. Next feature is focus on cause and effect relationship. Financial accounting will give you the profit, but financial accounting will not give the detail what contributes to this profit. What are the factors which increases the profit? What are the factors which decreases the profit? Cause and effect relationship will not be known by financial accounting. But management accounting will disclose when we got the profit, how we got the profit, why we got the profit. If the profits have increased, decreased, what are the factors why the profits have decreased? The cause and effect relationship will be known from management accounting. Next one, not bound by any specific rules. See here, it's not an exact science. It is not mechanical. It is not bound by any specific rules because management accounting is for management. So the management accountant will do only that activities which are required by the management. So we can change our system, we can change our reporting methods according to the requirements of the management. So we are not bound by any specific rules. Next one is supplies information, not decision. One of the feature of management accounting is its main function is to supply the information. The management accountant cannot take the decisions. Ultimately, decision making authority is in the hands of the management. This management accounting only will generate the information and supply this information to the management for decision making. So ultimately, management accounting is a means to an end, not an end in itself. The end is decision making and that will be taken by the management. So these are the features. I have explained you about the features of management accounting. So in examination, they may ask you about the features. Now I am coming to the next topic called objectives. Why? Why this management accounting is required? Already we have the financial accounting. What are the objective? The first objective is supplying data to management for formulating future plans. First main function of the management is planning. Planning means deciding in advance, formulating the plans to be implemented in future. So for the purpose of formulating the plans to be implemented in future, it requires information. So first objective of this management accounting is it should supply the information to the management for formulating the plans. Second, make the data easily understandable by the management. See here, if the data is more technical in form, then the management cannot be able to understand it. Management cannot be able to understand it. So it is the responsibility of the management accountant to modify the data in such a form that it will be easily understandable to the management. Next objective is making strong relationship between different departments. One of the main function of management accounting is it has to coordinate among different departments. Because the management accountant's job is such that there should be complete harmony among different departments. All the departments must function efficiently, effectively. So the objective is this making strong relationship between different departments because every department is dependent on one another. No department will be independent. Monitoring the actual performance to see that it is as per plans. This management accounting is not concerned only with planning, but also it is concerned with controlling. The management's main function is planning, organizing, controlling. If we make only plans, then automatically we cannot be able to achieve. After making the plans, there should be a system to control Control means we have to check whatever we have planned, are we achieving it or not. If there are deviations between the actual performance and planned performance, then measures should be taken to remove the deviations. So the objective of management accounting is not only to make the plans, but also to compare the plans with the actual performance, so that we can be able to know what are the variances. Next, to motivate the employees by fixing targets and providing incentives. See, the efficiency of labor force has to be increased. The laborers will be encouraged, will be motivated if we provide incentives. So this management accountant's job is to increase the labor productivity. Sufficient incentive schemes should be implemented so that they should get motivated and work hard. So this is also one of the objectives, to increase the labor productivity by providing incentives to the labor. Next one, to keep the management fully informed about the latest development. Management requires the information about the latest development in the technology, in the system, in the environment. So it is the responsibility, objective of the management accounting to provide the latest information developments to the management. The management should be well informed about each and everything to keep the tax burden of the organization to the minimum. Nowadays, the main critical activity of the business is tax liability. So it is the responsibility, it is the objective of management accounting to reduce the tax burden by making tax planning. So helping in tax matter also comes within the ambit of management accounting. Last one, to maximize the wealth of organization. See, ultimately the objective of the business, objective of the company is to maximize the wealth of the shareholders or owners. When the owners have invested the money in the business, their objective is to get the return. That is called maximizing the wealth of the shareholders. So that should be kept in mind while taking management decisions. Management accountant should help the management in such a way that it should maximize the wealth of the shareholders, owners. That's all. So these are the objectives of management accounting. Now I'm going to explain about the scope. The scope of management accounting is very, very wide, because management accountant's main job is to help the management in performing its functions. In performing its functions means planning function, organizing function, controlling function. Planning. The management has to make the planning. For making the plans, some forecasting, some estimating is required. So management accountant must help the management by providing all these different plans. Then secondly, organizing. Every organization should be a formal structure. Organizational structure should be there. There should be the relationship between authority and responsibility. So proper formal organization should be there. Thirdly, controlling. Comparing that whatever we have planned, are we achieving it or not. So in order to perform those functions, every activity which is related to this planning, organizing and controlling is the scope, will come within the scope of management accounting. So what are the areas in which the management accountant is concerned with? He is concerned with financial accounting. See, financial accountant's job, cost accountant's job is limited, the scope is limited, whereas management accountant's job is very, very wide. Financial accountant's job just to record the transaction and at the end of the year prepare the financial statements. Cost accountant's job is to prepare the cost statement, recording all the different elements of cost to control the cost, whereas management accountant's scope is very, very wide. First of all, he is concerned with financial accounting. The management accountant will collect the information from the financial accountant. From financial accountant, all the different types of reports, data it will collect. Suppose I am the management accountant. I will collect all the financial information from financial accounting. After collecting that information, I'll process it. I'll modify it, make it suitable for decision making and supply it to the management. So from financial accounting, I will collect it. Secondly, cost accounting. The cost accounting is also within the ambit, within the scope of management accounting. Suppose I am the financial management accountant, I must know about the details of financial accounting and the details of cost accounting also. Because I will collect the reports or data from cost accounting department also. I will change, I will modify it and supply this necessary information to the management. So my job is not confined only with financial data, but also with the cost data. Apart from the tax planning, tax accounting. Tax accounting means one of the responsibility of this management accountant is to reduce the tax burden. He should know how much tax liability will arise, what are the different dates of filing the returns, to which department we have to file the return. So everything should be according to the tax provisions. The next one is internal audit. Financial performance. The performance appraisal within the organization should be done so that there should be proper internal control. And if there is proper internal control, easily statutory audit can be conducted. Everything will be in order. There should be no chaos. The next one, budgetary control. Budgetary control is one of the technique of planning. Budgetary control is one of the technique of planning. That means a budget is a plan of activities to be performed in a future period of time. So preparing the budget for each of the department comes within the ambit of budgetary control. Next comes forecasting. Forecasting means predicting. The management accountant is concerned with forecasting about the future course of action. So the forecasting methods, different methods are there, like statistical methods are there, operation research methods are there for forecasting. Next comes reporting. Reporting means what are the different types of reports to be prepared, and these reports should be submitted to different levels of management. Lastly, office services. The smooth functioning of office services like data documentation, filing, copying, then communication, all these internal official services will come within the scope of management accounting. Come on, now we'll start the next topic, that is functions of management accounting. What are the functions the management accountant will perform? The first function is planning and forecasting. That is the first, because the management accounting is future oriented. That means always the management should focus on the future. So for future, the management accountant has to make the forecast, planning, what we have to do in future. The main function, the management accountant must know what are the techniques available for making the forecasting for different activities. Secondly, modification of data. That means the data is available in raw form, which is not understandable to the management for decision makers. So the function of the management accountant is to modify the data in such a way that it can easily be understood by the management, and management can be able to take the decisions. Next one, financial analysis and interpretation. The data which is available in a raw form has to be analyzed. So different techniques are available to the management accountant for analyzing and interpreting. Example, making a comparative study, common size study, ratio analysis, so many variance analysis, so many techniques are available to the management accountant for analyzing the data and making the interpretation. Next one is managerial control. See here, it is not concerned only with planning and forecasting. Management accountant's function is controlling also. Controlling means they have to fix the standard. By using standard costing, marginal costing, variance analysis, it has to fix the standards. And once the standards are fixed, time to time, the standard should be compared with the actual to analyze the variances. To find out why this variance is arising between the standard and the actual. So this comes within the ambit of control. The managerial control is also one of the function of management accounting. Communication. See, the position of this management accountant is very, very severe, very, very critical. That means he is in the center of the organization. He has to communicate with the different departmental managers, because the management accountant has to supply the information to different levels of management. Every level of management requires different type of information. So management accountant has to supply the information to different departments. So the function of the management accountant is communication. Next one is use of non-monetary information. Management accountant does not use only monetary information. He has to take into account the non-monetary information like units. So that is also one of the function of man. Next, coordination. There should be cooperation, coordination within the departments. The management accountant has to function in such a way that there should be proper coordination between different departments. Next one, strategic decision making. The management has to take many types of strategic decision making, whose consequences to the business will be in a long period of time. So the management accountant has to help the management in taking those strategic decisions. Lastly, information. The main function of this management accountant is to provide the information to the different levels of management for decision making. So these are the functions of management accounting. Now, advantages of management accounting. Many advantages are there. That's why every big organization will keep a separate department called management accounting department. So what are the main advantages? The first advantage, management's need for information. The management will cry for information, because without information, management cannot take decision. The main function of the management is decision making. Decision making means choosing among the alternatives. So many alternatives are there, the management has to choose any one of the alternative. That is decision making. And decision making can be done only with the help of information, required information, timely information. So management accounting will help the management by providing the information so that the management can take prudent, efficient, prompt decisions. Next one, efficient planning and effective organization. By keeping this department of management accounting, efficient planning can be done. The very first function of the management is planning, deciding in advance what should be done in future. So the success of the business depends on efficient planning. So this management accounting will help the management in proper planning and organizing. The organization should be structured in such a form that there should not be any chaos. Every authority, responsibility, relationship should be clearly mentioned. So this management accounting will help the management in proper planning and effective organization. Next is service to customers. By having this management accounting, there will be cost reduction. When the cost reduction is there, the business can be able to supply the goods to the customers at a reasonable price and the better quality goods. So customers' main requirement is reasonable price and better quality goods at reasonable price. And that requirement of the customers will be fulfilled by this management accounting. Next, increase in efficiency. See here, when management accounting is implemented in the business, started in the business, then definitely the efficiency of different resources will increase. That means material can be efficiently used, labor can be efficiently used, machinery can be efficiently used. So all the resources can be efficiently utilized and the objective of the organization can be achieved. That's the main advantage. Next one is maximum profitability. The profitability of each of the activity, each of the department will increase when we keep the management accounting, because every departmental manager will get the information from the management accounting to take the decisions. So overall the profitability of the business will increase. Next one, industrial relations. See, normally there will be some friction between labor and management. The labor will think that our standards are fixed to so high it will be difficult for us to achieve. Whereas if we keep very low standard, easily the workers can be able to achieve the standard and get more and more wages. So there should be a proper system of incentive to be given to the workers. When there is a proper system by management accounting, then what will happen? Industrial relations will be good between the labor and the management. There won't be any friction. Next comes control. Proper controlling can be done with the help of management accounting because it will help in planning as well as controlling. Seeing that whatever we have planned, are we achieving it or not? So variance analysis reports can be prepared. Why the deviations are arising between the standard and the actual. Last one, contribution to the society. By keeping this management accounting, the profitability will be increased. The use of resources will be efficient, due to which there will be upliftment of there will be economic development. So overall economic development can take place. It will contribute to the society also by keeping this management accounting. So these are the advantages of management accounting. Now we will discuss about the limitations of management accounting. There are many advantages, but also this management accounting will suffer from some disadvantages, limitations. The limitations are dependent on accounting information. This management accounting department is not an independent department. The management accounting depends on other departments, example financial accounting and cost accounting. The management accountant will collect the information, data, accounting information from financial accounting department and cost accounting department. That means if the management accountant has to prepare good reports, accurate reports, the data collected from financial accounting should be accurate. So the accuracy of management accounting depends on the accuracy of financial accounting and cost accounting. So before modifying the data, analyzing the data by the management accountant, he has to see the accuracy of the data which is received from financial accounting and cost accounting. That is the limitation of management accounting, that it depends on other accounting departments. Next, subjectivity. Lot of subjectivity is created in management accounting because the management accounting is future oriented. Future oriented means it has to make the prediction, forecasting. When forecasting is applied, some subjectivity will be applied. That means the reports prepared by two management accountants may not be same because they will apply their own personal judgment in forecasting. Next one is interdependency of disciplines. It is difficult to find a management accountant who should be expert in every field. That means he must have the knowledge of accountancy, he must have the knowledge of economics, statistics, mathematics, engineering. All these techniques the one person management accountant must possess. Then only he can be able to perform the functions of management accountant. Next, not a substitute to management. It is not an end. By keeping management accounting system, automatically the objectives of the organization cannot be achieved. It is only a means to an end. Ultimately, the success of the business, the success of the organization depends on the decisions taken by the management. So management accounting only supplies the information to the management. It is not a substitute to the management. Next, dependent on level of execution. When management accounting provides the information to the management, so ultimately it depends whether management is accepting the reports of the management accountant or not. Next one is expensive. Evolutionary stage. Presently the management accounting is at the infancy stage. It's not a full-fledged accounting system. Still lot of room for improvement is there. Still research is going on how to make management accounting more and more effective. So still it is in the initial stages. Next one is expensive. To install management accounting system in an organization requires huge resources. So only a big organization can afford to keep this management accounting system. So these are some of the limitations. But compared to advantages, limitations are few, advantages are more. That is the reason why management accounting has become so popular in organizations, because its benefits far exceeds than its limitations. Now next one is financial accounting and management accounting differences. Very frequently in examination, theory question will be asked regarding what are the differences between financial accounting and management accounting. Both have some similarities but many differences. Similarities are both are accounting system, both are concerned with recording the transaction, both are concerned with preparing the reports, both are providing the information. So these are the similarities, but many differences are there between financial accounting and management accounting. Now we'll discuss one by one. First one, objective. The objective of financial accounting is to record the transaction, classify the transaction, analyze the transaction in order to prepare the financial statements. The objective of financial accounting is the accounting for preparing the financial statements. The financial statements consist of profit and loss account and balance sheet, or income statement and position statement. For preparing these financial statements, financial accounting is kept. But management accounting, the objective is to provide the information to the management so that management can take efficient, effective decisions. That's the objective. The objectives are entirely different, financial accounting and management accounting. Second, nature. The financial accounting is more objective, whereas the management accounting is more subjective. Because in financial accounting, we are concerned only with the past data. So whatever had happened in the past, that will be recorded. So there is no subjectivity. The complete objectivity is there in financial accounting. But in case of management accounting, it is future oriented. It has to make the estimations. It has to make the personal judgments. So subjectivity is more in case of management accounting. Next is orientation. Orientation means the financial accounting is past oriented. Whatever had happened in the past, that will be recorded. That means all the transaction conducted during the year will be considered while making the financial statements. The past oriented. Whereas management accounting is future oriented. That means all the forecasting, planning will be done, estimation will be done for the future. Next one is flexibility. The financial accounting is more or less based on the principles, that is generally accepted accounting principle, GAAP. So most of the financial accounting is dependent on GAAP. That means they will follow the accounting principles, procedures. Whereas in case of management accounting, it depends on the management requirement. So whatever management required, that reports will be prepared by management accounting. So more flexibility is there in management accounting. Next comes statutory obligation. It is compulsory to maintain financial accounting, statutorily required to maintain financial accounting. But management accounting is not statutorily required. It is optional. It is optional in the hands of the management. They can keep or they cannot. They can ignore it. Periodicity. The financial statements are prepared at the end of the year, only once. So reporting will be done only at the end of the year in financial accounting. In management accounting, the reports will be prepared as and when it is required by the management. Next is precision. The financial accounting is more precise because they will prepare the reports only at the end of the year. After collecting full information, accurate information, they will prepare the financial statements. Whereas in case of management, they are in hurry. They have to provide the information to the management as soon as possible. Management cannot wait. So in order to speed up the processing of information, appropriate information, not precise information, is focused in case of management accounting. Now scope. The scope of financial accounting is very limited because it is concerned only with recording the financial transactions to prepare the financial statements. Whereas the scope of management accounting is very wide. The management accounting is interdisciplinary function. That means the management accountant scope is very wide. He must know financial accounting, he must know cost accounting, he must know tax accounting, he must know budgetary control, he must know different aspects of the business. Scope is very wide. Next, audit. Audit is compulsory in case of financial accounting, but audit is not required in case of management accounting. Now focus. The focus will be only on monetary transactions in case of financial accounting. But in case of management accounting, it is concerned with both monetary variables as well as non-monetary variables. So these are the differences between financial accounting and management accounting. One more topic in this first unit is regarding differences between cost accounting and management accounting. Yes, of course, there are few differences between cost accounting as well as and management accounting. The first is objective. The objective of cost accounting is to ascertain the cost, is to classify the cost, is to prepare cost reports to find out the cost of production. That means its focus is to find out the cost of production. Whereas management accounting is concerned with modifying the data or supplying the information which is required by the management. The objective is different regarding cost accounting and management accounting. Second, orientation. In case of cost accounting, it is past and present oriented, whereas management accounting is future oriented. Next comes scope. The scope of cost accounting is limited because they are concerned only with cost of production, not with revenue. Whereas in case of management accounting, its scope is very, very wide. Not only cost, but also it will consider the revenue and other aspects. Next comes principles. There are strict rules and regulations in case of cost accounting. That means while preparing cost accounting reports, some principles, rules will be followed. How to maintain the cost accounts, how to prepare the cost accounts. But there are no specific rules for making the reports by the management accounting. It depends on the requirement of the business, requirement of the management. Next comes evolution. If you compare the history of cost accounting and management accounting, the cost accounting history goes back to Industrial Revolution. The cost accounting was there since a very long period of time, but management accounting was recently evolved. Next comes usage. In case of cost accounting, only we take the cost, we won't take the revenue, but in case of management accounting, we consider both cost and revenue. Last one, factors considered. Many factors will be considered in case of management accounting, but the factors to be considered in cost accounting are very few. So these are the differences between cost accounting and management accounting. So in this video, I have explained you about accounting, branches of accounting, limitations of financial accounting, definition meaning of management accounting, features of management accounting, functions of management accounting, objectives of management accounting, scope of management accounting, advantages, limitations of management accounting, and lastly, differences between financial accounting and management accounting, and differences between cost accounting and management accounting. These are the topics I have discussed in this video, and this is very, very important to write the theory question in examination very frequently. Every time they will ask one question. So watch this video till the end, not once, but twice, thrice. Then you can be able to remember the points. You can write in your own words if you understood this theory. So if you are satisfied with my lecture, give a like to the video. Share my channel in your friends group, in your circle, so that more students can watch the video and enhance the knowledge. Give your comments on these videos, and lastly, don't forget to subscribe my channel.